Japanese cryptocurrency exchange Coincheck plans to complete Nasdaq listing this year. Japanese cryptocurrency exchange Coincheck plans to complete its Nasdaq listing in the second and third quarters, reports CoinDesk. Coincheck specified that the exact timing must be approved by shareholders of Thunder Bridge 4, the SEC, and Nasdaq. It was also revealed that Coincheck plans to list on Nasdaq through a merger with Thunder Bridge Capital Partners 4. The deal has been postponed twice since its announcement in March 2022. After the merger is completed, the company, registered in the Netherlands, will be renamed Coincheck Group and will be listed on the Nasdaq Global Select Market under the ticker CNCK, joining Coinbase as the only cryptocurrency exchange with publicly traded shares in the USA. Victims of cryptocurrency exchange FTX's bankruptcy may receive full compensation. FTX has significantly more funds than needed to pay compensations to the victims of the cryptocurrency exchange's bankruptcy, which occurred in November 2022. The count is in the billions of dollars. The bankrupt firm plans to distribute the money among creditors, reports Bloomberg. It is specified that additional funds will go towards paying interest to more than 2 million company clients. This is a rare case since, in U.S. bankruptcies, creditors usually receive mere pennies. In any bankruptcy, this is just an incredible result, said FTX Chief Executive Officer John Ray, who led the firm when it went bankrupt. It is known that once the company completes the sale of all its assets, it will have $16.3 billion in cash, according to the exchange's statement. It owes customers and other non-government creditors about $11 billion. SEC dispute with Robinhood could end in platform shutdown. The U.S. Securities and Exchange Commission, SEC, legally threatens Robinhood, continuing the fight against cryptocurrencies. The trading platform may face enforcement actions related to its cryptocurrency business in the USA, details Yahoo Finance. In the so-called Wells Notice, an important legal document issued by regulatory bodies, received by Robinhood on May 4, it was stated that SEC staff had made a preliminary decision to recommend enforcement actions due to violations in registering as a securities broker. Robinhood warned that a potential lawsuit from the SEC could mean a public trial, which could result in a fine, a cease and desist order, and other restrictions on its cryptocurrency activities. After many years of good faith efforts to work with the SEC to clarify regulatory requirements, we are disappointed that the agency decided to issue a Wells Notice, said Dan Gallagher, Chief Legal, Compliance, and Corporate Affairs Officer at Robinhood. Recall that earlier, the SEC began pursuing several firms that allowed American clients to trade cryptocurrencies. For example, in June of last year, the Commission filed a lawsuit against the largest American cryptocurrency exchange, Coinbase, claiming it operates an unregistered exchange by allowing the sale of certain crypto tokens, which the agency considers investment securities and, therefore, under SEC jurisdiction. Currently, Coinbase and its CEO Brian Armstrong are contesting these charges. They argue that the cryptocurrencies sold through the exchange are more akin to baseball cards than securities. Bitcoin mining ceases to be profitable, miners begin shutting down old equipment. If the price of the first cryptocurrency does not rise above $80,000, miners will face difficult times. In recent days, we have seen a trend toward Bitcoin price recovery, but the market still cannot recover from the sharp decline recorded at the beginning of May. The price of the first cryptocurrency fell below $54,000, negatively affecting investor sentiment. According to Bloomberg, 95% of spot ETF holders reacted calmly to the price correction, but even a small portion of sellers created real panic in the market. Representatives of the large investment fund Grayscale Bitcoin Trust, GBTC, share interesting statistics. It turns out that in a short period, holders withdrew BTC worth $17 billion, while on the morning of May 7, the fund had cryptocurrency worth $18.4 billion. Experts believe that the consequences of the recent drop will be noticeable for several more months, as potential buyers cautiously view digital gold, expecting another price fluctuation. But miners are particularly hard hit. As is known, a Bitcoin halving occurred on April 20th, which led to a halving of profitability. Previously, each block could yield 6.25 BTC, but now it contains only 3.125 BTC. Hut 8, one of the top 5 largest mining companies in Canada, has already shared disappointing results. For example, while 234 coins were mined in March, the number of BTC decreased to 148 units in April. And yet, the effects of halving were felt for only 10 days, while in May miners will fully face a severe liquidity shortage. But the problem is not just that miners began to receive fewer coins, as this has negatively impacted the payback period of the equipment. Specialists familiar with the problem write that only Hut 8 was forced to shut down 25,000 cryptocurrency mining devices at the end of April. All of them previously generated income, but after halving they were deemed unprofitable. The decision has already impacted the revenue of the Canadian company, but such a step will allow reducing current expenses since the old iron no longer allowed for profit. Analysts noted that at the end of March, many large mining companies sold a lot of free cryptocurrency, spending the proceeds on purchasing additional equipment. For example, the American Bitfarms announced investments of $240 million, while Marathon Digital reported allocating $200 million for new hardware. This will allow painlessly disposing of old equipment, reducing electricity costs, and increasing profitability. It seems that even in this case, counting on super profits is not an option. According to analysts, on May 2nd, there was a historical low in the Bitcoin hash price index. Miners have never earned so little there, and this index is calculated based on the ratio of computing power considering the cost of electricity and the cryptocurrency rate. On May 7th, the indicator reached $50, meaning equipment with a capacity of 1 PH/s can generate exactly such profitability. It is separately indicated that shortly before the halving, profitability indicators reached $120, while at the end of 2021, they exceeded $3,500. The times when farmers could earn huge profits with minimal costs are gone, and analysts talk about a long-term crisis in the industry. Currently, the Bitcoin rate has stabilized at over $60,000 per coin, while the average cost of mining 1 BTC is $53,000. This only includes electricity costs but does not mention other key variables. As mentioned above, farmers need to increase spending on the purchase of expensive equipment, as old iron is unprofitable after the arrival of halving. It is also important to remember the need to maintain existing capacities and pay taxes. Cryptocurrency mining installations tend to become obsolete, and today costs are significantly higher than profits. Representatives of the CryptoQuant platform have published approximate calculations, according to which, for mining companies to profit, the price of digital gold must rise to at least $80,000. Only after this will the above expenses pay off, but no one knows for sure whether Bitcoin will overcome this mark in 2024. If the stagnation period lasts too long, mining companies will start going bankrupt. Many of them already lack free liquidity, having spent coins on purchasing new equipment. At the same time, most are also burdened with a credit portfolio, forcing them to sell cryptocurrency. If there are fewer coins than needed for operational activities, it will be necessary to sell the hardware, and there is still no way out of the crisis. Will global BTC ETFs impact the crypto market? Since the beginning of this year, the foundation of the BTC investment program was the launch of new spot Bitcoin ETFs, which were approved by the American regulator in January. This step had tremendous potential for an influx of new money into the token, as a result of which the token soared from $45,000 to a new peak of $73,750 in March, writes Bloomberg. However, by May, the influx of investors into new BTC ETFs slowed down. The debut of spot Bitcoin ETFs in Hong Kong was unsuccessful, and the price of Bitcoin fell by 20% from the March peak. In this context, investors are asking one important question: what will happen when Bitcoin ETFs become global? To answer this, the situation in the USA should be considered, where the launch of spot Bitcoin ETFs recently occurred. Even before this launch, more than a dozen other spot Bitcoin ETFs already existed worldwide, including in Canada, Germany, and Brazil. The significant difference was only the larger size and popularity of the new Bitcoin ETFs in the USA compared to other countries. In 1 month, the new ETFs in the USA accounted for 83% of all assets managed by spot Bitcoin ETFs worldwide. The largest was the iShares Bitcoin Trust. This explains the high expectations for the debut of spot Bitcoin ETFs in Hong Kong on April 30th. However, there was no loud debut. The total amount of funds invested in BTC was only $10 million, significantly less than the $100 million predicted a few days earlier. Various reasons are cited for this failure, including a worsening macroeconomic situation, and the fact that the concept of investing in BTC through ETFs remains primarily an American phenomenon.